Hello, everyone. Good day, and welcome to today's webinar themed Financial Parenting: How to Strategically Plan Your Child's Future, brought to you by United Capital Group. Thank you so much for joining us today. In a world with rising education costs and economic uncertainty, parents must plan early to secure the best opportunities and generally give themselves good peace of mind. Financial parenting, as we know it, goes beyond just saving. It's about teaching values, creating financial structures, and future proofing your child's journey and your child's future as well. I am Adenuga Rebecca, a wealth advisor at United Capital Wealth Management, and it's a pleasure to serve as your moderator today. We have an engaging and informative session lined up for you today, and I'm really excited. We'll be discussing how to strategically plan your child's future, the various tools that can aid financial parenting, common misconceptions, and so much more. Before we begin the session, I just want to say thank you to everyone who has joined. We're so happy to have you here, and we cannot wait to see more of you on the call. A few housekeeping guidelines for us just to guide us through today's session. This session is in listen-only mode. Should you have any questions, we'll be having a dedicated Q&A segment later in the session where our speakers can address all of your questions. For our wonderful Zoom audience, please submit your question via the Q&A section or the chat box located at the bottom of your screen. And for those joining us via YouTube, please use the comment section to drop your questions. Also, please note that this session is being recorded and the recording will be made available immediately after the webinar. Now, I would love to introduce our esteemed speakers who we have here today. First on board, we have Tina Nwaiwu, Director of Sales at UC Microfinance Bank. With over 15 years of experience across investment, tech, and financial services, Tina is passionate about leveraging digital tools to drive seamless sales experiences. Hello, Tina. Thank you for joining us today.
Hi, Rebecca. Thanks for having me. Thanks to our esteemed audience for joining us today.
Right. Up next, we have Adedayo Durojaye, who is the head retail and mutual fund sales at United Capital Asset Management. Adedayo is a seasoned wealth manager who brings on board over a decade of experience in strategy, financial planning and advisory, and business development. Thank you so much for joining us, Adedayo.
So much for having me, and thank you to our esteemed listeners for joining.
Thank you. And our last speaker for today is Nnamdi Okeke, who is the head private trust at United Capital Trustees. Nnamdi is an expert in private and corporate trusteeship, family office management, and dispute resolution. Hello, Nnamdi, and thank you for joining us.
Hello, Rebecca. Good morning, and good morning to our esteemed parents, guardians, and even intending parents. You're welcome.
Right. Thank you so much to our wonderful speakers. Now that introductions are done, let's dive right into today's discussion. It's going to be very exciting, that I can promise you. And we're very sure that all parents, even intending parents, as Nnamdi rightfully said, will gain so much from today's session. We want to really understand what financial parenting is. And I would love to, ask Tina, many parents want the best for their children before they leave, but they often leave financial planning to chance. But to you, what does financial parenting mean in today's Nigeria, and why is it, more important now more than ever?
Thank you, Rebecca. So financial parenting, more like it is thinking about your child's future and being intentional. For me, it's the intentionality that surrounds, that particular word. We understand what's going on today. I mean, none of us we are all oblivious of what's going on. There's a lot of things dragging pocket share. There's health, there's feeding, which has become so expensive, right? Then there are other needs that a parent has, right? And there's now the education path. But you being intentional means that children must stay in school. I mean, it can be a hashtag in your head as a parent. Regardless of all the expenses that's coming our way, this child must not be sent home, right? And that is what financial parenting is all about. We understand that sometimes parents would have made plans, but emergencies will eat into that pocket and school fees now becomes a thing, right? In the past, somehow parents would have struggled to get by, but right now with what's going on with the economy, when emergency come, and you need to address it. In UC Microfinance Bank, we understand this very clearly. We understand the reality of the economy. So we have carved out a product called Back to School Loan. And this loan, the hashtag for us is children must not be sent out of school. It means children have to stay in school. Those fees need to be paid, the books need to be bought, and children will be educated, right? Gone are those days where people sneak around when they want to take loans. You know, they don't want people to see them taking loan facility to address different needs. But in the current economy, not in just in Nigeria, but all over the world, you would need assistance from time to time. Be it that you do not have cash at hand as at today, and you're just waiting for something to come through at the end of the month. And that child has to be in school, right? That's what Back to School Loan is about. Ensure that that child is in school, take this loan facility and address that need, and you just carry on like nothing happened. I remember back in the days when we were younger and they line us up on the assembly ground, and so people are sent back home because they've not paid, can be really embarrassing. And in most times, when the payment is done eventually and that child comes back to school, you see some sort of erosion in the self-worth or self-esteem of that child, right? Because they're still trying to, you know, get back in track and looking like everything is okay, but everybody has already stigmatized that child somewhat, right? So what we are trying to tell parents today is you need to be intentional that that doesn't happen to your child, whether you have cash now or you have it later. What the most important thing is that there is a facility available for you to address that need. So in summary, to your question, Rebecca, financial parenting means being intentional, especially when it comes to education.
Thank you so much, Tina. That's just spot on. And as you said, it just jogged the memory of how those days, as you said, on the assembly ground, they single people out on the line, and it's usually very embarrassing. It's thank you so much for that. And then to Adedayo as well, we would love to hear what you have to say regarding this. What does financial parenting mean to you in today's Nigeria, and why do you feel it's so much more important now?
Thank you so much, Rebecca. So for me, I believe financial parenting is being responsible, really, taking responsibility for the child's, whether short-term, medium-term, long-term, needs, and ensuring that you follow through the journey to ensuring that they achieve those goals that you have set out for them. So there are two responsibilities here, actually. So one is you have to train the child to know what to do and how to do it. And how do you do this? So firstly, you can teach them every gift they get in form of funding and all. You can get them to save that money. And after a while, when they are gathered enough, like the use of piggy banks and all that, and after a while, when they gather them, make them understand the need from switching from savings to investment. And this is what can now preserve them against inflation and against, naira devaluation and all that. So once you take this responsibility, you teach them. You also take another responsibility of investing on their behalf, in meeting their short-term needs. You just like Tina said, meet their short-term need for school fees and ensure you save as well for their long-term need for whether school fees or healthcare, as the case may be, even provide seed capital for their establishment in life. And by the time, because you have also trained them, by the time they get to that future, you have planned a form of a legacy. They will be able to, manage it accordingly because they have been well prepared for it. And so that's why it's necessary at the time that we are in Nigeria today. Financial parenting is quite important. Thank you.
Thank you so much, Adedayo. That was very, powerful, very well packed. And what I could really get from that is that apart from just short term, you can also think medium and long term as well. And some of these habits that we instill in our children start from a young age. So even apart from just the investment, you could also instill financial literacy to your kids even as they grow. Thank you so much. And I know I mentioned at the beginning that we have a dedicated Q&A segment coming up. But please, if you have questions along the line, feel free to drop your questions as we go along on the session, and they'll be attended to. Thank you so much to everyone who has joined us so far. We're happy to have you here. And the session is getting more interesting now. We're about to dive into, much more deeper topics. I want to come over to Nnamdi now with your vast experience in the trustee industry, from your experience with clients and parents. What is one common misconception you often see, when it comes to preparing financially for a child's future? And just to add to that as well, especially in the context of legacy, which is what you also focus on in terms of structure and the protection as well. What is one common gap you see in how Nigerian parents approach financial parenting?
Thank you very much, Rebecca. So, good thing is that I'm a parent, and I'm going to create a scenario so that it becomes very interactive. I'm going to have general parent, and I'm going to have Nnamdi's response. So generally, the misconception over the years has been that parents would say, oh, let me take the needs of this family, let me take the needs of this child one at a time. When I have a child, then I will plan. The God that gives me the child would also give me the resources to plan. Nnamdi will say, no, you don't have to have the child here to start making plans. Another parent will say, oh, when I have money, if I don't have money, what am I going to plan over? And then Nnamdi says, no, you don't have to wait until you have money, Agreeing that you will get to that stage where you will take responsibility for a child's well-being, including the child's education, it's already enough for you to start putting templates in place, start inquiring about what it would take, Parents would also say, if I start at a point in time, it doesn't matter, I don't even know how many children I'm going to have and all that. And I say that if you start early, you can put resources together, enjoy the compounding effect of investment, of yields. So assuming 10 years ago, you started earning income and you started putting things together, having in mind that this is for your children or the people that will be under you in one capacity or the other. 10 years after, 1,000 naira invested will no longer be 1,000. It would have, compounded. Now, parents generally would say, my ability to plan depends on my work, my kind of income, how well I sell in my shop, and all that. And I will tell you that why not make a futuristic plan such that when you now have that job you are talking of, you won't have to wait for the 31st day of the month to be able to even up the needs of your children. You won't have to, make a major sale in your shop before your children go to school. You won't have to be under stress, before you are able to meet up and put that stress invariably to your children. So it's a major misconception, thinking that it's only for the wealthy, thinking that you don't even know what tomorrow will bring and all that. If you put a watertight plan, together, you are able to beat even inflation. So let me give you this scenario. Imagine a parent that many years ago was intentional, knowing that he wants his kids to attend a school outside Nigeria. Maybe he started pulling something together in USD denomination or other denomination. And this whole thing with regulation happens, that you had a major boom with the value of our USD and every other thing. Such parents is not going to be affected. You beat such kind of scenario by making a futuristic, by making a deliberate plan. And even in the short term, even if you want to do something in the short term, being intentional, being deliberate would help you avoid, having to rely on maybe when your salary comes in, having to take it one after the other. And you never know. You get to have twins, and you are planning just when I have a child, I'll do for one. And God has blessed you, and now Mama Meji, what will be your plan at that point? And to your second question, which is very, very, very key in this point in time, one thing I want to inform parents listening to us, and even intending parents, times have changed. Things have changed. The world doesn't work the same way it used to work anymore. If you're still planning around your children and you are naming them as your next of kin, this is 2025, you need to get information to know that those plans you've made up, you are going to stress them if you are not more in the picture, because no institution would honor treating whatever you've left behind for them as next of kin. They will need to go to the court, get the necessary documentation, regardless of the fact that they are your next of kin. But if you make necessary plans through the necessary instruments available, for instance, a trust, you don't have to subject them to all this stress. So it's a pity that to see have that misconception that having them as next of kin is everything. Then most people will still, I see it as a major gap in Nigeria that most parents still leave things to chance. There's this sad experience that I monitored a lot growing up, and it's still prevailing in the modern day practice amongst parents. You manage to train up, first you don't plan. I will put everything on not planning. First, you don't plan as a parent. You don't prepare ahead of time, even before having children. And then you bring forth your first child. God blesses you with your first child. You manage to train that first child to a certain level. Then you crown this child the king of suffering, who must train your 7 other children, or as many others as you get to have. This child would not be able to start his own plan early because he has to train Ikechukwu up to university level. He has to train Bolaji up to whatever level. He won't get married on time. And it's all a product of not having a plan in place at all. And it's a major gap, leaving everything to chance. And it continues. So it forms a family legacy, really, where you fail to make plans, you expose your breadwinners to not making another plan, and it continues. Now, you imagine scenarios that we see in our Nollywood where the first child that you've trained refuses to now take this responsibility. It becomes the bad elder brother. So for parents, I'll tell you that come is the age where you are deliberate and intentional. You take advantage of tools available. Particularly, we have something called the Education Trust. It's targeted towards this kind of scenario to help you to be intentional, to help you to make plans, and to relieve you of the stress, that comes with day-to-day planning. And even when you're not in the picture, it's still very much functional. Thank you very much, Rebecca.
I mean, amazing. Thank you so much, Nnamdi. That was so packed. And I mean, this is such an exciting way to start, this webinar and really lead us into what we want to discuss. I really enjoyed the parts you talked about, the next of kin misconception that we have in Nigeria. Most parents, even most people in general, believe that once they've written down a name as the next of kin, anything that happens to them, it goes straight to the next of kin, or the next of kin will benefit anything. The next of kin is generally just known as a point of contact and even not a beneficiary. So it's very important, to parents, intended parents, to ensure that you are able to set up something right to ensure that your desired beneficiaries benefit from what you want them to benefit from. And I think it's also very important to note that we shouldn't just, leave things to chance. Your children are not your retirement plan, as sometimes I like to say to my clients. You don't leave your first child to take care of everything. And the best thing to even note is that time in the market matters. So if you're able to start now, start early, you are in the best position. Thank you so much, Nnamdi. And you touched on education trust. So let's get a bit more, specific. How does an education trust work? And what makes it such a strong financial parenting tool compared to just keeping money aside in a child's name?
Okay, thank you very much, Rebecca. So I like to think of this as a continuum. Recently, we had a webinar on trust where we really went into what a trust is. But for the benefit of our audience who did not attend that, a trust enables you to appoint an expert, whom you entrust certain assets for a specific purpose for the benefit of the beneficiaries. In this case, this is a trust specially meant for educational needs. So you are setting up similar structure. It's part of your estate plan. It could be for long term, it could be for short term, but primarily for education. You can set it up as a married person. You can set it up as an unmarried person. You can set it up as a guardian. You know, if you are appointed a guardian to take care of certain minors, you can do that through an education trust. So how does it work? Upon appointing a trustee and committing the resources, whether you want to be pulling it together gradually or the resources is already full, you know, commit it to the trustee. The trustee would manage these resources and would have just one strict mandate: to cater to the education needs of your children. It could be for one child. You could have deliberately for each child. You can have for multiple children. You can have it as a continuum, such that if you have a new child born, you add the child as a beneficiary. But it's important to state that ideally you should start putting this plan early, so that by the time your children are of age or qualified to attend the certain level of education you are putting this together for, you would have much more funds available in that pool than you started with. Importantly, I must state that although we are focusing on children, you can also use education trust to cater for your own education. People leave legacies that have educational instructions through education trust, and this is done. Now, why is education trust very strategic? It is strategic because you are not allowed to honor any other needs other than the educational needs of the named beneficiary. I said earlier that the misconception around next of kin and beneficiary. A trustee honors the needs of the beneficiary, not that of the next of kin. We are watching out for these things so that we educate our audience to be deliberate, intentional, and accurate in whatever they are setting up. So let me give you a scenario. Growing up, I grew up under very hardworking parents, and my mom would always put funds together and say, "Oh, Nnamdi, I have this small money I'm putting together. It's for you to achieve A, B, and C." And I tell you, in 2 months' time, life's challenge will come up and we'll liquidate that money, just like that. And my mother will tell me, that money is the money I kept for you, but I'm already going to use it for something that is beneficial to you. She has a way of tying it back to me to be sure that it still goes back to me. But now we're talking about my education and we've spent it. We have to start all over again. It means we'll go back to the issue of taking care of the educational needs as they come, leaving it to chance. Luckily, I survived. Many children don't survive that practice. So what we are saying now is, you put together this structure. You can start with as little fund as possible. You grow it over time. Now, your trustee is not going to honor a request when you are saying you want to pay your rent. He's not going to honor a request when you are going to use that money for somebody that is not in the trust. Your trustee is not going to honor that request when you say, "I want to go for a vacation. I need money from that education trust to make it up." No. Rather, your trustee is waiting for an invoice from the school that you intended for your child to attend to be able to pay those fees. And he continues to do this. And it can take care of more than one child, and this helps the parent to even attain a form of discipline in terms of where you are spending money and all that. And the beautiful thing is, because it's part of an estate plan, that resources you've put together is not going to be subject to probate. Remember, it's already with the trustee. And the whole essence of setting up the trust is to avoid a probate scenario. Mismanagement of funds will not be the case because your trustee is already managing this to the optimum standard required in the industry. Your schools are more than happy to welcome trust fund babies. They know there's already something put together. So the child is always going to pay school fees. Unlike the scenario that Tina, my colleague, created earlier, schools that know that this person is a trust fund baby would always reach out to the trustee. So there is no need to even send the child out. If the trustee delays, then it's something technical and not because the child is not going to pay their school fees. So it's a way of making sure your child experiences very quality education under a relaxed atmosphere and removing all manners of stress from the parents And remember, if you start now, it will keep growing and growing until the appointed time. So you're hearing us now, you just got married, it's a good time. You just got a girlfriend and you want to marry her, it's a good time. You just had your first child, it's a good time. You may start from the primary education, let it be the purpose. You can start from the secondary education, let that be the purpose. You can say this is for the university education. And it's instructive for those later part of education, because by then you may be older and may not be earning as much as you were earning much earlier. So education trust is very instrumental in helping you make a plan. And if the person setting it up passes, that trust continues. The trustee's obligation to cater for that education need, according to the fund available, continues. So it doesn't die with the owner that sets up this particular structure. So I recommend this to parents. And another beautiful thing is that with all the services, education-related services that United Capital offers, you can even put all of them into the education trust. So you have a savings here, you have an investment here, you put them together into the trust to make sure that at the end of the day, if your trustee maybe don't have adequate funds available with it, he knows you have another investment whose intention is to eventually sink into the educational trust structure to be able to perform your intended outcome for your children's education. So I congratulate parents, and I tell you that you need to make a plan around setting up education plans for your child today, particularly an education trust. Thank you.
Amazing. Thank you so much, Nnamdi. Again, wonderful, wonderful. We could listen to you talk about education trust all through. That was so amazing. And what I could really pick is I remember when we used to jokingly tease the trust fund babies in my school. I wasn't part of them, but it's really amazing to hear. And what we could really pick is it's education trust and having a structure that allows you to cater to your children's future and their education through a third party, allows you even stay more grounded in your decision and allows everything to fall through right in place rather. Thank you so much. Now I want to talk about another part of the financial parenting structure that I think people also shy away from, and it's discussing how we can bridge short-term gaps for parents. I would love to come over to Tina now and really discuss this. We all know that school fees are a major financial pressure for parents, especially during the back to school season, because like tuition, the books, uniforms, your kids want to buy new school bag, your daughter wants the latest trolley bag or trolley bag now. All of these expenses keep piling up. So with education and also with private education now estimated at least I think 65.5 million naira now. How does UC's back to school loan help ease this burden, and what sets it apart from traditional lending options?
All right, thank you, Rebecca. As I mentioned in the initial, when I did the introduction, right? Back to school loan was a product that was carved out based on what we see that's happening in current reality. When we wanted to set this product apart, we went to schools, we asked proprietaresses and proprietors, like, what are you seeing? What's going on? And they're saying, oh, we are noticing that parents who could afford the school fees, who used to pay even before students resume, are struggling at the time. And the answers are not far-fetched. We see what is going on today. You have money, like Nnamdi had said, they kept money for education for him, but something comes knocking at the door. And the funny thing is, you need to address that need. As much as we are projecting that education is very important, which it is, but there are other needs that will come knocking. At that point, you're not even thinking. You just go in, pick that money and solve the need. And schools are beginning to get a bit worried because obviously they will do what they know how to do best, send the child back home, because that's the only way the parents can get the message, right? We even spoke to one of the schools that says, listen, at some point we weren't sending home. We just kept doing SMSs and calls to the parents, but we saw that we're not getting traction. So we noticed that parents will only react when these children are embarrassed. It's not our best way of doing things, but obviously we need money to run the school. So back to school loan is a loan that we sat and thought about to say, listen, why are these kids sent back home when the parents can access these loans and pay it over time, in installments as their salaries come, or their businesses, they sell stuff in their businesses or do business and, get the money. And we decided to carve out this back to school loan. So back to school loan is just a loan that has been carved out for education. So it means that you can pick up this loan and settle your child's education needs, be it tuition or books or uniform or whatever that has to do with education, right? For you to access this loan, you need to have some sort of cash flow. So you can be a salary earner with the government or with private parastatals, or you can be a business person, right? But we just need to understand that you have capacity to pay back. And the only way a lender understands capacity is cash flow. And we see this on your financial statement. So it means that this parent needs to prove to us to say that, listen, month to month, I get something, I get in something. So it tells us that you can meet up your obligation in repayment. Also, would go and check your behavior or your character with the bureaus, right? The credit bureaus, because obviously we just met you. We don't know you. We know you want to access school fees loan, but we also want to check your character to see that you have not taken loan somewhere and run away. It's very important to us to see that you have capacity, which is ability to pay back, and you are willing to. Those two things in lending is very, very key, because you find people who have the money to pay back and they're just not willing. They just have the money in their pocket and say, what? I'm not paying you back. Am I the only one that's owing Nigeria? So we want to match that character by checking the bureaus to see, how have you performed with other credits that you've collected? If you're new to credit, obviously we'll look at your financial statement and we'll do some postulations and projections to say, okay, this person is new to credit, but this person is earning and has a good job, and seem responsible, because we've met you and stuff like that, then we'll send you, we'll disburse the money to you. But what's most important is that credibility and capacity, which we are checking from the bureaus and checking from your financial statement. Once those things align, all we need you to do is fill out a form and, fill out a form and tell us how much you want. That's just a request form. Then we'll send you to our mobile app where you also download and do the needful. You just follow the flow. We'll see how much you're requesting. People come requesting 10 million, but when we check your capacity, it's only 1 million you can get. So it's very important, if you notice, I'm matching these things because that would inform subsequent instrumental payments. It's very important for us, right? We want to extend this loan, want to solve your problem. We also want to get our money back, right? So you make a request, then based on these two things I've mentioned, capacity and willingness, we'll check it and we'll tell you how much you get. So Rebecca can say, oh, I want 10 million. Obviously, sometimes people over-exaggerate it. So before in the past, we'll ask you to bring the school fees, receipt and things like that. We'll match it. But presently, we don't do that because sometimes you want to do things associated out of school. Maybe school bus, maybe just tending to this child and making sure that there's food available to even take as lunch to school. So what we do now is we'll just do the evaluation with your financial statement and tell you how much we can avail you based on that. There's a regulatory there's a regulation around how much anybody can get, be it in Nigeria or all over the world. It ranges from 33.3% to 45% of your income. We'll do that calculation and tell you, okay, Rebecca, you want 10 million, but based on your income and what you are seeing, you can get 3 million, right? And we'll then do the processing and you get the loan. So in less than 24 hours, you should be able to get that fund disbursed to you. We'll call you to find out you've gotten the money, then we'll follow you through the instrumental payment part, just doing reminders to say, listen, you're due to repay. And the good thing is, if another term comes and you're yet to address another school fees need, you can then do something called the top up. So perhaps you paid 2 or 3 or 4 times and you still need money, because we know how the terms go. They go so quickly, like 3 months come so fast. I mean, and you can come in and say, I want to top up. I will do that top up for you, give you an additional. Based on the repayments you've done, it means that your allowable amount now expands again. Then we'll give you, then you go and sort out the need. So for us at UCMFB, we're saying, parents, it's okay to take these loans to address these needs. Don't let your children be at home, or don't let your child be at home. It's too embarrassing for the child, for you. It doesn't make sense that you leave for work and you're leaving a child who is meant to be at school, at home, because of money, when you know that there are places where you can take this money and address this need. So I'm recommending this to parents who have low cash flow at the time, or who have investment or trust within Nnamdi and doesn't want to touch it. like now this parent, mother was touching it. We don't want you to touch it. Keep that there. You have an immediate need. Come in for a loan, take the loan. Some parents are expecting some inflows in 2 or 3 months. Take the loan, address it. There's something called early liquidation, right? The loan would have been for 12 months. It's okay to come in and say, listen, I've held your money for 2 months. I want to repay. We'll do the calculation. We'll take our interest for just 2 months and you close out that loan. So it's available at any time. We're just saying, understand it's available. And we're also saying it's okay to take the loan. Just ensure that all children are in school where they should be.
Thank you so much, Tina, for making us understand that UCMFB is just not out here to take the loan or give you the advice to take the loan, but we put you through and make you understand your capability and also help you to guide through how you can structure a proper loan to take care of your children's education. And while we are advising and saying that it's okay to take a loan, for so many people and even parents as well, taking a loan still feels like something to be ashamed of, either because of their past experiences with other aggressive lenders or the fear of being labeled as irresponsible. But when we really think about it, the reality is loans can be a smart part of financial planning when done right. But so to you, Tina, once again, what should parents really understand about taking loans responsibly? And how is UC a safer, more supportive alternative to the loan sharks we hear so much about?
All right, thanks, Rebecca. So advice to parents, there's something called diversion of funds, right? You have a need, you have come in for a loan, then you see a pretty car, then you buy the car. The need has not been addressed, but you have satisfied some inner want, at that point. And obviously at that time, you're going to struggle paying back. For us, lenders will call it irresponsible borrowing. You have a need. Why is a car all of a sudden so attractive than addressing the need? So advice to parents is you have a need. There's a reason why you came in. You've thought it through, right? I want education loan for my children, for instance, and you take the back to school loan. It's more satisfying when you address that need, then you start your instrumental payment, right? You would take according to what that needs require. We've seen parents come in, say, oh, you are eligible for 10 million, for instance, and they say, no, don't give me 10 million. Give me 3 million. That's what I need. That's a responsible parent because you understand that if I take this 10 million, yes, it's a lot of money. I mean, once you see that money, you can start thinking of what you have not done before. This vacation, this summer, we are going to go, because there's an excess funding, right? But if you say, give me 3 million, that's because you've thought it through. Maybe Emmanuel and Joseph's school fees, everything comes together to 3 million, blah, 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 and you want to take it and address that so that when we are hitting your salary every month on instrumental payments, it doesn't hit you so bad. Because if you take a 3 million, we're hitting your salary. Obviously, if you take a 10 million, we're hitting more than your salary. Do you understand what I mean? So for the loan sharks out there, they're extending money to you. They're not asking what you want to use it for. There's no advisory. They're not there. They just say you take, because they know obviously they're going to take the money back eventually. So when you break that covenant, they will go after you with everything that they have, right? There's something called irresponsible recovery, right? That's what you see online where they are jacking you and carrying your entire bin and your car. But at UC Microfinance, because we take out time to speak to you, to understand what you need, right? We would extend that money based on this conversation that we have had. And there are reminders we'll do before your loan is due. There are account officers tied to each customer or each parent. So which means you are not a standalone. Somebody is taking you through that journey. Somebody is making sure that there are no problems when you want to repay. And when there is a cause of default, somebody is also calling you to say, sir, you are 3 days past due. You are meant to have paid this money. What exactly is going on? So we at UCMFB, we are licensed by CBN and we have some rules and guidelines to follow. So we obviously can't fall in the pocket of irresponsible recovery, but we'll go through that process with you to ensure that that recovery is done and monies are coming in instrumental as the agreement is done, and so that nobody is feeling a type of way. But what is most important is giving a customer money that they need for a particular need to address. Don't over leverage them. Don't give so much out because they can afford it. Because at the end of the day, they would definitely struggle.
Thank you so much, Tina. That was very, very insightful. And as we can hear, I was hearing it through your voice. You sound so passionate about what you do. And what I believe that our viewers and our listeners can also pick is that you see MFB really does care. It's not just about approaching you or you approaching us and we give you a loan and you have to repay. We sit with you and advise properly, help you to plan your repayments that aligns with your income so you do not bite on more than you can chew. Thank you so much, Tina, for shedding so much light on that. We see your questions coming. Thank you so much for everyone who has stayed with us from the beginning up till now. The questions will be well attended to as we get to the Q&A segment. Now, we've discussed on the various structures in terms of the legacy protection and also being able to bridge financial short-term gaps that parents may have. Now, we want to get into something that I believe is very interesting is what are the tools, what are the actual investment tools that I can use? I know I want to bridge a gap. I know I want to have protection, but what am I protecting? So we want to dive into understanding the investments, short, medium term, and long term investments. And Adedayo would be taking us through this segment. You know, when it comes to building wealth for your children, some parents would typically either wait too long or don't even know where to begin. You know, as Nnamdi rightfully said, you put money aside, you take it out, you put it back, you take it out. So Adedayo, why do you think long-term investment is often overlooked in financial parenting?
All right, thank you so much. For me, the reason it's overlooked, well, I'll tie to lack of awareness. So an investor has to be aware of what he or she wants to do. I mean, understand the objectives. If you know your objectives, then you're able to break it down into buckets of short-term, medium-term, long-term, and that will guide how you invest accordingly. And so once you're able to understand your objectives, also understand your risk appetite. Once you know your risk appetite, to know that short-term investment might be for those who are risk averse, those who don't want anything to happen to their money. Okay, so you can take short-term. But then long-term, the reason again they are running away from it is because they don't want to lose money, fear of credit, of market risk. I don't want to lose any money or interest. So, but unfortunately, what gives you stability, gives you, you can leverage on compounding, and also ensures that you leave a legacy and get high return on your investment over time. So let me give an instance. You leave 10,000 Naira in a short-term investment, say a money market fund, and you leave 10,000 Naira in a long-term investment, say equity fund. If you come back 10 years time, the equity fund would have given you better returns on your investment because it will give you capital appreciation, you will have leverage on dividends and a lot more. And so, but short term will not give you some of such opportunities other than maybe dividends alone, because of say the money market instruments that you have invested in. So a client has to be aware. So I feel, number one, such investors should reach out, such parents should reach out to a financial advisor that will guide them accordingly, help them to identify and spell out their objectives, identify their risk, and understand the horizon to know what am I investing for, short-term, medium-term, long-term. And this way you're able to plan for the child's healthcare, plan for the child's education, and so many other needs that might arise for the child. So it's very important that they meet a financial advisor who will help them to identify these things and then address them accordingly, so that it can guide along in the investment journey for the children.
Thank you so much, Dayo. Thank you so much. I mean, what we really understand is the first thing to really note here is being able to seek the right guidance, right? A lack of awareness is a very common thing around us, and which is why United Capital, as thought leader, we always try to put sessions like this in place to ensure that everyone is being aware of the opportunities that are available to them. And you also made a very powerful point on the power of compounding. Most of the time we shy away from long-term investment because we think that our money is just tied up. But there are various investment tools that allows you to even earn interest along the way as your investment stays for a longer period. And there's something I always see when I speak to, a group of investors is when you fail to plan, you're basically planning to fail. So thank you so much, Dayo, for shedding light on that. We just want to say that United Capital is a well-known brand and we are thought leaders in what we do, which is why today our wonderful audience will be getting an exclusive sneak peek into a new product that we have set aside, which is called the Children Investment Fund. Now, while the fund hasn't officially launched yet, you're among the first to hear about it. So congratulations to everyone on the call today. Dayo, please, can you tell us what this upcoming fund is all about, how it works, and why it is such a valuable tool for parents who want to plan for their children's future?
All right, thank you so much. Rebecca, thank you for giving that. For exposing parents to Children Investment Fund. So Children Investment Fund is an actively managed Naira-denominated fund, and so it focuses on long-term capital growth. It helps to give steady income, and it's a diversified portfolio that cuts across equities, fixed income, and money market instruments, and is targeted at investors who are looking to build a good financial reserve for their children, in order to meet the needs of these children, and like we said, across short-term, medium-term, long-term need. But especially this Children Investment Fund, especially, it's a specialized fund for the long-term, meeting the long-term need of these children as it relates to education, healthcare, and it's of a moderate risk, appetite. So even there's no excuse that I don't have money is not an excuse. It's of a moderate risk, and it allows even affluent investors to come in to invest with as low as they can. But in terms of performance for the Children Investment Fund, we have diversity. So because it's diversified, it has equity, fixed income, and money market instruments. It helps the investors, the parents, to be able to take advantage of stable and competitive return, as the case may be. We also have accessibility. So whenever you need to access it, we are regulated by the Securities and Exchange Commission, and this fund is regulated. It's going to be one of our mutual funds, the first of its kind in Nigeria, and for records, United Capital Group, that we always at United Capital Asset Management as well, we always push out, always try to trailblaze and to be the leader, while others follow. So it gives access to liquidity anytime you need the fund. Within a minimum number of days, you can quickly access the fund without any recall. So you accessing it, and it gives capital preservation. So you're looking at good returns and something that ensures that your capital that you have invested is not eroded, in the course of your investment. The Children's Investment Fund gives you access to that. And like I said already, it has a very, very, very minimum risk, to it. So I won't want to give too much. I want to paint a scenario around it. So you're looking at your children attending a Ivy school. So you want them to attend maybe Harvard or Yale, or you want them to go to Covenant University or any big university out there. What you simply need to do is look at how much can I invest now, and for how long do I want to invest. Within 10 years, I need to raise so amount of money, and so you begin to put that money in the Children Investment Fund in order to be able to meet that obligation, meet that objective, and achieve that goal for that child. And again, you need to assess short-term need. I mean, you can use our other funds like our money market fund to meet such short-term need, while you save this one specifically in order to meet long-term need and achieve long-term return. Thank you very much.
Thank you so much, Adedayo, for throwing so much light on our new fund. To our wonderful audience and attendees, please keep your ears open and your eyes wide open as well. When the time is right, we'll be sending out communication on this new fund, and we would love for you to, take advantage of it and derive the benefits from our Children Investment Fund, which will be launching soon. Thank you so much to our amazing speakers. We've learned so much today. There's been so many gems dropped, and I believe that each and every segment we've been able to pick something up. We have interesting questions that our attendees have dropped, and without wasting more time, we will be going right into the Q&A segment now. I would like to start with a question from Tola Falano, and I'll be directing this to Nnamdi. And it says, how do we make savings for a child who is a special need child to cater for his future in case of demise of the mother or parents?
Thank you very much, Rebecca. And to that attendee who asked that question, I would recommend a trust structure, really, because that would enable you appoint your trustee, who is a professional, whose duties would include taking cognizance of the needs of that child, advising on the best way to utilize the fund you are going to set aside, and this obligation continues. So what trustees basically do is, based on the instructions you've given them, they carry it out over a period of time that you would permit them to. So for this child, I would recommend a trust structure. It could be a holistic one, because this child is not limited to education. The child has a special needs, means the child has to go to a special care center, means in terms of the upkeep of this child, it may also require some other details. So it's a whole plan, but focused on this child. And it doesn't matter that the mother is deceased, where the trustees need to bring in an expert caregiver who is specialized in attending to such child, the trustees would do that. And then the trustee can always account to all the sponsors responsible for pulling in these funds to take care of the child, or assuming the mother also left some assets for the child, would also account of whomever is the protector at this point in time. Thank you very much for that question.
Thank you very much, Nnamdi, for your answer. I hope that Mr. Tola has gotten a good response. So we have a question from Selina Yakubu, who says, please, can I have this recording? I really want to go through it without distraction. Yes, definitely. So on YouTube, the live recording is going to be made available immediately after the session is done. All right, so to Dayo, we have a question from Tosin Oluyoko. Please pardon me. It says, dear Dayo, what is the investment strategy of United Capital? Active or passive, and what product do you have for Nigerians in the diaspora?
Okay, thank you, for that question. For United Capital, we are a group and we offer diversified offerings that can cater for your need. So, just like you have represented here, you see microfinance bank, you have trustees. I represent the asset management. For the asset management business, we have what we call USD mutual funds, and one of them is the Eurobond fund that cater for diaspora investors. So there's no limit to how much you can invest in that fund, but the minimum investable amount is as low as $1,000. And it ensures your capital preservation and gives you appreciation or very good yield on your investment. So I don't know what return you're attracting in your current investments, but the Eurobond gives you a high return and is regulated by the Securities and Exchange Commission. So we are liable to give you the best in terms of that aligns with regulation. And we also have the Global Fixed Income Fund. So you are looking at a more stable income and a stable return over a longer period of time. We have what we call the Global Fixed Income Fund that, with as low as $50,000, you can access that and get even a higher return. And the asset class that we invest in, they are diversified. So they cut across, not just the bonds, Euro bonds issued within the Nigerian system, also sovereign Euro bonds, and that can give you better returns on your investment. We'll be available after this call to be able to give you even a robust, description of some of the products that we have. And beyond the product, we can create a product for you. So even if the current one doesn't align with your goals, we'll create one that can align with your goal and will deliver value to you. The most important thing is keep investing, and diversification is what you can leverage on. Thank you.
Thank you so much, Dayo, for throwing so much light on that question. As he rightly said, we have various investment opportunities here, various investment products for you at United Capital. So please do well to reach out to us. So I have a question here for Tina from Mr. Tosin Uluyoko. It says, what is the interest rate and tenor for the back to school loan? Is it available for overseas study? What is the primary collateral for this loan? And what is the maximum obligor minute?
All right, thank you, Rebecca, and thanks, Mr. Tosin, for asking that question. On the rate, we are very competitive. On the back to school loan, like I mentioned earlier, is discounted. So the regular rate that we charge for our loans, we are discounted it because it is back to school loan. But I can bet you we are highly competitive in the market. The longest tenure is about 18 months, right? And the single obligor limit for that loan as at today is 10 million for us, right? You can use it for overseas studies, but what is most important is that the person repaying that loan resides in Nigeria and makes his money in Nigeria. So if the parent wants to use it, for instance, to pay for Rebecca, who is in school in the UK, what is most important is that that parent is here. He or she is accessible in Nigeria. I can locate the person in Nigeria and go to the office to check the person up and follow up with installments, right? So it doesn't care where the education resides, whether it's Nigerian education or overseas education, but the obligor himself or herself needs to be a resident in Nigeria, needs to be making money in Nigeria as well.
Okay, thank you so much, Tina. We have a question here, and I'll direct this to Adedayo as well. From Aniebet Umo. Says, I have a dollar mutual fund I opened a year ago for early savings for my children's education, but funding the account has been difficult because of the deposit procedure. Do you have a dollar fund, and what is the process of funding the account?
All right, thank you so much for that question. So there are regulations, the regulations in Nigeria around funding USD. Might be a little challenging, but we are available to give you advisory on what channel and what steps to take in order to, do the right thing by, investing appropriately. So we have USD, like I mentioned earlier, we have USD investments in our mutual fund. Even beyond our mutual fund, we have USD investments. We can avail you this information more and more even after now. So I mentioned Eurobond just for this purpose of this question. We have the Eurobond fund that allows minimum investable amount $1,000, and subsequently you can pay as low as $500. And we have custodians through which you can inflow your USD with ease and without any rigor. And in case you need any advice as to what documentation is required by this these banks so that they can allow you transfer such money without giving you headaches. I mean, we can put you through on steps, and you'll be able to transfer accordingly. So you should be talking to United Capital Asset Management on this. USD investment, move it to us and let us manage it for you and make your life easy as you deposit in that child's future, and as you invest in that child's future. Thank you.
Thank you so much, Adedayo, for answering that question. All right, we have a question from our YouTube audience, and it's still to Adedayo as well, while we still have you. It says, I already have a trust for my kids, but I would love to know more about the Children Investment Fund. How does it really differ, and how can I use this effectively?
Okay, thank you so much. So while we await the full launch of the Children Investment Fund, I will want to limit the information I give on this webinar so that I don't let the entire cat out of the bag. But in terms of Children Investment Fund, it's a Naira denominated fund, and we can assure you that, I mean, when we fully launch, if you can provide your details, just reach out to us on any of our channels and tell us that you want to invest in a Children Investment Fund, provide you appropriate detail, and you'll be able to carry out the investment accordingly. Thank you.
All right, thank you very much, Dio. And if you permit me to just add my own little knowledge to the question as well. You know, having a trust is a protection tool, is a preservation tool, and even the Children Investment Fund, when eventually launched, can become part of your trust. So the Children Investment Fund, I believe, would allow you to have a tool for actually creating the wealth and compounding your wealth creation and accumulation. And your trust that you have for your kids is an amazing tool you have already. You can include your investment fund in the trusts. Thank you so much. All right, so Tina, we have a question as well from YouTube. It says, the back to school loans, is it just for children? Can adults who may be trying to fund their education also have access to it?
Absolutely. I mean, as long as you want to go back to school. So, but it's not just for kids, it's just fashioned for education. So back to school means Tina wants to go back to school to get a DBA, for instance, or a PhD, or you want to go back to school to get a master's. You know, in this case, obviously, as adults, I want to believe that we would then be the obligor, be the one taking the loan, because I believe that at this age, perhaps some of our parents have retired. So if you still have a working parent and they're ready to sponsor, then they can take that loan on your behalf. You can also come in with them so that, because we understand that the higher you go, education is more expensive. So an MBA, for instance, will be more expensive than a BSc. So if you're lucky to still have a working parent that have not retired, you guys can then, join forces, based on income or businesses, then you are able to assess more. So your parents is taking that loan, you're also taking it. What's most important is that that loan is discounted, because you could have come in for any other kind of loan and you'll be paying a bit more when it comes to the rate. But back to school is catered for education. So yes, you can use that loan to further education. But at this case, we'll then need to determine who the obligor is. If your parents are near retirement, they might get the loans for a shorter tenure. But if you are an active working class person, or you do business and we can show some cash flow, then you take that loan on your behalf. But what's most important is you enjoy the discounted rate.
All right, thank you so much, Tina. So to our wonderful audience, you're not constrained. The back to school loan is available for even adults as well. All right, we have another question again, and I would like to direct this to Nnamdi. And the question is from Chukwuemeka Dennis, and he's asking, does the trust fund expire if the child finishes school or doesn't want to continue further education when the parents are no more around? What happens to the funds in the trust?
Okay, thank you very much, Rebecca, and thank you, Chukwuemeka, for that question. So part of the elements of a trust is that it's very flexible. Flexible because the settlor, the person setting up the trust, would answer to so many scenarios and give us specific instructions that applies to so many scenarios. For instance, if the resources in the trust is not exhausted, and the child graduates to the highest level of education that the trust envisaged. We always find out, even while creating the trust, what will the settlor want the balance to be deployed for. So we have that documented in the trust deed. And also, we ask the settlor as well. For instance, if you are no longer in the picture and this particular child you are planning for, or any of these your children you are planning for, refuses to continue going to school, what happens next? The answer would shock you sometimes. We have parents who have said if they refuse to go to school, use it for their cousins. My legacy is education. Some will tell you, oh, wait for their children to be born, and then as trustees, I give you some other instructions. So we always move in line with the instructions of the person setting up the trust. And I want to use this opportunity to add something for our listening parents. My colleague Adida was speaking the other time, and we're looking at what major differences. The way a trust is built, it can house so many investment options, as long as it's not high risk to deplete the actual fund you are targeting to achieve one goal or the other. As a parent, you can decide to set up an education trust and want part of the funds in that education trust to be invested into the fund, or whichever means. It can take care of local denomination, it can take care of foreign denomination. So it's very useful for multiple scenarios. Thank you.
Okay. Thank you very much, Nnamdi. Please, while I still have, there's another question from you from an anonymous attendee. And it says, in the event of an emergency where the associated costs could be covered by my education trust investment, what steps should I take? Is Nnamdi indicating that the funds would not be accessible to me under such circumstances?
Okay, help me to, the person is asking that where there is an emergency that is not education-based and you want to access the funds for, so it depends. If it is the settlor who has set this up that is insisting, so if you set up a trust, you can terminate the trust, right? Once it's revocable, some parents will tell you, I don't want it to be revoked. Let's assume the person knows himself to not be so disciplined and wants to make sure that under the sun, under the rain, this trust continues to exist. In such case, the trustees will require some conditions, but where it is flexible and revocable, and you want to make that sacrifice, it is you that set up the trust in the first place. But one of the benefits of setting up an education trust is to help with the discipline of setting funds aside for education and not being able to deploy it to any other thing other than education. Now, if this need or this request is from a beneficiary who has a need, maybe the parents are not in the picture anymore, or this beneficiary suddenly wants to attend to other emergencies that is not education related, I'm sorry, but the trustees will not honor that. And the reason is that if you open that window, as trustees, you are accountable to the trust deed and also to the beneficiaries. So if you open that window, I'm a parent and I will tell you children are very creative. Somebody can also create an emergency and access the funds and have a party that you will see somewhere in the internet. So we do not honor in that scenario. Thank you.
Thank you very much, Nnamdi. Thank you to everyone who has sent in questions. We're very, very grateful. And do not worry, if your questions aren't answered here, we're going to be sending emails and you'll have a chance to get your question answered. Now, I'm going to be taking our last question for today, sadly, and we'll be directing this question to Adedayo, and still from Mr. Tosin Oluyoko. Dear Dayo, how will capital preservation be guaranteed when the portfolio is structured to invest both in equity and fixed income assets? If I am an aggressive investor, can I give instruction for my investment to have higher percentage in equity, considering the long-term investment horizon for the investment? Over to you, Dayo.
Thank you so much. I believe this is specifically for the Children Investment Fund. So I would say that it's going to be a mutual fund. And by structure of a mutual fund, you, as an investor, you're not allowed to give instruction as to where to invest, how to invest, unless you want to create a portfolio where you have our portfolio managers manage that separately. And you'll be able to, from time to time say, because of economic conditions, I want to alter my earlier instruction, and then they can, manage it as you have advised. But in the case of a mutual fund, by structure, we have a fund manager who has the liability and prerogative to invest in assets that will ensure, if he has promised by his trust deed, in the case of United Capital Asset Management, where we have promised according to our trust deed that there will be capital preservation, it is the duty and the onus is on the fund managers to ensure that that investment is not invested in anything, any asset that will erode the principal. So that would be my response to that question. So where they have promised that there will be capital preservation, we will ensure that we follow through to ensure we don't invest in anything that will erode the capital, but ensure that there's capital preservation, which means that your principal is safe at every point in time. And then there's capital appreciation, ensuring that you get maximum return on your investment, from time to time. And so we also pay dividend on the children investment fund on an annual basis. And so you can decide to recapitalize your dividend in order to compound it and even get better returns on that investment. So thereby creating additional capital appreciation for your investment. Thank you.
Thank you very much, Adedayo, for explaining that so much very well. Right. Thank you again so much to our wonderful attendees. This has been very insightful, interacting, and so much worth of knowledge has gone out today. Thank you so much to our guest speakers. To close out today's session, we'd just like to run through our guest speakers to give us just a one-liner, one piece of advice that you'd like to give every parent, intending parent, a guardian who wants to give their child a strong financial foundation. And I would like to start with Tina, and then we can move on to Nnamdi and Adedayo.
Thanks, Rebecca. It's been a very interesting session. So for me, again, I'm advising, it's okay to take a loan. It's very okay. Dangote is taking a loan to do business. People are taking loans. Tony Elumelu is taking loans to do business, as long as it makes sense, right? I spoke about diversion of funds. We do not encourage diversion of funds. If you're a parent, if you're anybody listening, I would advise you, take a loan when it is necessary. Don't wake up and just go take a loan. It will be very difficult to pay. Be it, paying from your salaries or your cash flow, or just the mental state of paying back just becomes very worrisome. But if you address a need, for instance, paying that child's education, right? But every morning he wakes up in the morning, wear his clothes and say, oh, daddy, bye-bye, see you later. You are satisfied because you didn't have the money, but you met that need, And we had one parent one time called after taking back to school and after 2 weeks, and she just called and she was crying and she says, thank you. And I asked her why, and she says, listen, every morning this child, till now, after 2 weeks, I still don't have money. So if I didn't access this loan, this child would have been home with me. There'll be no mommy bye-bye, there'll be no excitement, there'll be no, so take a loan. It's okay to take a loan when the need arises and address that need, especially when it comes to education. What your watchword should be is that every child should be in school. Thank you so much for listening, and thanks, Rebecca.
Thank you so much. Over to you, Nnamdi.
Okay, thank you very much, Rebecca. I will start by recalling what my client told me recently. We're talking about making plans. And my client said if he had the opportunity, he would go back to being a toddler. And I was surprised. Children are very interesting. I said, why do you want to do this? He said, because at that point, I don't have so many responsibilities. I get somebody to force me to eat, take me to school and all that. And I said, sir, I echo your preference, but I would like to be a toddler whose parents planned for me. Because if you're a toddler and they don't plan for you, it becomes a very ugly experience. In fact, you want to grow up quickly. So for our audience listening, in that light note, I want to let you know that making a plan has become a necessity. You don't leave things to chance anymore. If you plan properly, you will have an easier life. You will not age out of stress. You would beat inflation. And guess what? At United Capital, it's so easy to take any of these steps. If you're setting up a trust, you just fill a form, we'll assign an RM to you to guide you every step of the way. You don't have to have millions. Start somewhere. And I tell people who whine that, oh, I wish I did it yesterday. Forget about yesterday. Today is here. Call us after this webinar. Ask us how you can start. And I congratulate you if you're making that decision. So we'll wait to hear from you. Thank you. And for the children, which I'm still a child, we're looking forward to the Children's Day. So in advance, happy Children's Day.
Thank you so much, Nnamdi. Over to you, Adedayo, your piece of advice for our listeners.
Thank you so much, Rebecca, and it's been an interesting session. For me, I'll say, just to add to what my other colleagues have said, life is not a game of chance, it's an institution of choice. And the choices you make today determine, the future that you create for your children. So don't compromise, don't shortchange yourself by allowing your short-term needs to overtake your long-term goals. Ensure Children Investment Fund is going to be launched in a few days. Make sure you are part of those who are investing in it first. That first advantage is there. Once you come in early, you are part of those who are cashing out on dividend, when dividend is payable, and you get access to very good return, and you have amazing and laudable and wonderful fund managers here who are ready to follow you through across all your investment journey to ensure you achieve your goals. Thank you so much, and thank you for me.
Thank you so much, Adedayo. And just from my little side, I'd just like to say the best inheritance a parent can give their child is a few minutes of their time each day and a strong financial foundation for tomorrow. Now, as we conclude this insightful session, we want to thank each and every one of you for joining us today. A special appreciation goes to our speakers for taking time out of their day. To Tina Nwayu, who is the Director of Sales, UCMFB, we thank you. Nnamdi Okeke, who is the Head Private Trust at United Capital Trustees, thank you. And to Adedayo Dorojaye, who is the Head Retail and Mutual Fund Sales at United Capital Asset Management. Thank you so much for sharing, your wealth of knowledge with us. At United Capital, we remain committed to supporting families with the right financial tools to secure their children's future, either from saving and investing to structured planning. Today's session has really spotlighted practical solutions every parent can take advantage of, and not just parents, even intending parents. So thank you so much for joining. If you have any question or you would love to begin your journey with us or in any of the products we've mentioned or any of the structures that we also mentioned, our team is ready to guide you through every step of the way. Please visit www.unitedcapitalplcgroup.com to book a free consultation. Having a one-on-one session would really be impactful and helpful for you as well. Now, in case you missed any part of the webinar, or you would like to have a recap, the recording will be shared with you shortly. And you could also follow us on our social media platforms on Instagram, Facebook, and LinkedIn. We are at United Capital PLC. And on X, we are at United Cap. Once again, thank you very much for being a part of this wonderful conversation. My name is Rebecca Adenuga, and we would love to see you at our next webinar. And happy Children's Day in advance to all those who celebrate. Have a lovely day, everyone. Thank you.
Thank you. Thank you, everyone.
Thank you. Happy Children's Day in advance. I'm excited.